Candlesticks are going to help you predict which way a stock is going to be moving in real time. Candlesticks is going to be one of the best visual indicators for us to be able to know what to be doing next in the stock market. Candles are very important and they're not as tricky as they seem. So what really are candlesticks? Just breaking down to the very basics. Candlesticks is what you see when you take a look at my chart. When you see all the green and all the red, these little markers are what we call candlesticks. Now, I know when we take a look over on a chart, we just say, oh, that's the stock chart. That's just the graph. Green is up, red is down. That is true. Green is up and red is down. But at the same time, there's more detail inside a candlestick than what you may think. So candlesticks charts are used by traders to determine possible price movement based on past patterns. Candlesticks are useful when trading as they show 4 price points: the open, the close, the high, and the low throughout the period of time that trader specifies. Many algorithms are based on the same price information shown in candlestick charts. Trading is often dictated by emotion, which could be read in candlestick charts. So don't worry, I'm going to show you guys absolutely all of this, but what I want you guys to see here is just a very basic diagram of how a candlestick chart works, or a candlestick pattern. We have our green candlestick, or I would say our white candlestick. Whenever you see white, that's the same thing as green. Whenever you see black or red, that is when the market is falling on down. So black would be the same as red. We have bulls, means the market's going to go up. Bears means the market's going to go down. Bulls are usually in green. Bears are usually in red. So how does a candlestick really work? Well, a candlestick is going to be showing us the open, the close, the high, and the low. Let's imagine if this was a daily chart. This would show us that the stock opened up at, let's say, the price of $100. When looking at this candle, the very body of the candle, or the bottom of the body of the candle, is the open. The close, it could be at the price of 105. And the body of the close is the end result. That's at 105. This obviously shows us that the stock has moved on up. If it's a green candle or a white candle, in most cases green candle, and it has gone from open to close, we have moved up in numbers. That is giving us the result of this candle. We also have the upper shadow and the lower shadow, which is going to show us the high of the day and the low of the day. So this could say at one point it was up to 107, and at one point it was down towards $97. So just by looking at this candle, I can be able to say to myself, hey, this stock finished off the day green. It had a high of the day of 107. It had a low of the day of $97, opened up at $100, and closed the day at 105. That's a lot of information. So we have the upper shadow, which shows us how high it spiked up to on the day, the lower shadow, which shows us how low we fell down to on the day, and the real body of the candle is the distance between the open and the close on the day. Now, this is going to be the same exact thing over here in the red, but the only difference is in the red traders is it obviously opened up high and closed down low. So this would mean that we opened up at the price of 105 and we closed back on down at the price of 100. How do we know that? Because it's a red candle, which means the open is at the top of the real body and the close is at the bottom of the real body. The upper shadow is still the same. The upper shadow shows us that we had a high of the day of 107, and the lower shadow is still the same. The lower shadow still shows us that we had a low of the day of 97. So just by seeing the color, seeing the upper shadow, seeing the lower shadow, and the open and close of the day gives us a ton of information. So let's just take a look at my chart right now. If I wanted to go ahead and take a look over on OMH. OMH, this is a daily chart. And now OMH, I can already get so much detail about this play, which is pretty wild to think about. Because OMH, this is a stock that I would say to myself, whoa, this is a pretty kind of sporadic play. Well, how do I know it's sporadic? Well, it's showing me that it's had a high of the day so far, all the way up towards around this $32 region. It's also showing me that it's had a low of the day so far, all the way back on down towards around this $14 region. It also is showing me that at this moment, we opened up at around the price of $23, and we're currently sitting at around the price of $28. So you're telling me that this stock has been one active play today. we have seen that we have opened up at $23, fell on down to $14, spiked up to $32, and now we're sitting at $28. This candle alone shows us that it has been a very active day. We can also see it's been a very active day previously as well. We could see we opened on up somewhere underneath $10, let's say $7, and we spiked all the way on up towards around the price of $27, finished off the day right around $25. We could see these large green candles are very visually easy to know that the stock has gone all the way on up, but also the upper shadows and lower shadows tell us how far we have fallen or how far that we have risen on the day in total. So you can see that this has a big D right here. See this big D? This big D stands for daily chart, which means each one of these candles are within that day. So something that used to confuse me, okay, and I just kind of want to break it down like this, is I used to be confused when I first started stock trading saying, okay, this is a chart of OMH and this is a chart of OMH. So how are they looking different? Well, OMH, this is a 1 minute time frame. So each one of these candles represents 1 minute. Now, how does this chart different than this chart? What we're really doing here is, let's imagine if we grab today's candle and now let's zoom in on it. Let's zoom in as close as we can inside this candle. Inside this candle are these candles. So the daily chart is showing us, all right, what is happening on this day, but we can actually switch to a smaller time frame and actually see what's actually happening, what's actually making up this candle. So we could see that the low of the day came all the way down to $13.29. We could see that we spiked all the way up towards around $32. We could see that we opened right around $23, and we could see at this point that we're currently sitting at $25. So we can see this, that how this candle is now forming. So that used to confuse me when I first started. How is this chart the same as this chart? And you just need to know that the daily chart is going to be made up of whatever is happening on the actual day. So we could do a 1 minute chart. I could change this to a 2 minute chart, which each one of these candles represents 2 minutes. We could do a 3 minute chart, which represents each one of these candles be 3 minutes. But all of this is still what's happening inside this daily chart. But let's kind of talk about candlesticks a little bit more and make sure you guys understand them. Candlesticks, one of the biggest things about it is it can show us volume. Volume is extremely important. We've already had our volume lessons. And remember, what's easy ways to look at volume? Well, we can compare them on Yahoo Finance from their average to their current volume. We can go ahead and we could say to ourselves, oh, does a stock have good volume? Well, go ahead, type it over in on a level 2. GSIT. GSIT has good volume. Why? Because we could see that there's a lot of orders going through. We can see that the momentum bar is moving. We can see that people are active on this play. At the same way, we can also see that over on candlesticks. When a stock is healthy and a stock has good volume, these candles are going to be very close. They're going to be very full. We're not going to see a ton of upper and lower shadows, and they're not barcode-like plays. So what does a barcode play look like? I'm going to show you exactly that. Let's go back down to some of these penny stock top gainers, top losers that don't really have that much action today. So EQ, this is a stock that I already know if I type it in on the level 2, no one's trading this play. EQ, no orders, no momentum bar. It looks like a barcode. This means no one's trading it. When you see a play that looks like this, there's no reason to ever get involved into it, because you're just going to jump in on that play and be completely alone on that play. These candles look a lot different than GSIT's candles, don't they? GSIT's candles is kind of like what we see in textbooks and charts. MSN, these candles don't look good. These candles don't look good. PRSO, these candles don't look good. When you see a dash line, these little dash lines, that means that within this whole entire 5 minutes, this whole entire 5 minute period, there has been no orders whatsoever. So why do people say, oh, well, let me jump in on this play. I like this chart setup. I like this setup right here. You might sometimes get caught up by looking at the daily chart and you say, oh yes, I like this daily chart setup. And you go ahead and jump in. But then you realize that this play is absolutely dead and it's a barcode play, which means that time's going by and no one's even trading the stock whatsoever at all. This is where you get stuck into plays. So you want to know what a healthy stock looks like. This is what a healthy stock looks like. When you take a look over on GSIT, that's a very healthy play at this moment. We could take a look over on WISA. This is a healthy play at this time. We could take a look at LMFA. LMFA, this is a stock that came crashing on down, but at the same time, it's still a healthy play because it has volume, it has action, it has activity behind it, which is something that's very nice. We can see what volume looks like over on candlesticks now. So now you actually have many different ways to be able to see volume. You could see volume over on candlesticks. You guys can see volume over on Yahoo Finance. You guys can see volume over on the level 2. You have different ways that you could be able to read volume. So let's start looking at candlesticks in a little bit of a different manner, and how can they become predictable to us? How can we be able to predict candlesticks? Well, one of the easiest ways to know is that lower shadows show strength while upper shadows show weakness. Now, this is so important to me because this is how I make thousands of dollars in the stock market. Yes, guys, I'm telling you this right now. This is one of the biggest reasons why I am successful in the stock market. Let's read this again. Lower shadows show strength, while higher shadows show weakness. And it should, again, say upper shadows, excuse me. So we should have upper shadows show weakness. Now, this is crucial. Why is this so crucial for us? Is because when we take a look at this, learning about upper and lower shadows, what we have going at this time is, think about this as an example as someone climbing a mountain. Here is Mount Everest. When you climb up Mount Everest, you are climbing and you're hiking and you finally get to the top. When you get to the top, most people put a flag in at the very top, and they want everyone to know in the future that I have done this. I did it. I made it happen. I put this flag on in, and then you head on down. That's what you do. You climb Mount Everest, and then you go back on down. You don't just sit up there forever. So you climb up Mount Everest, now you go back on down. Let's just get rid of you here for a second. Now there's essentially just a big flag sitting at the very top. When you have that flag, it shows that you are now at the top. You can't go any higher than the very summit of Mount Everest. When you're at the very peak of Mount Everest, you can't go any higher. You put the flag in at the top, a long pole, and you go back down the other side. This is the secret on how I've been able to make thousands of dollars in the stock market. So when we take a look over on this, let's go over and take a look at some examples here. We could see lower shadows show strength while upper shadows show weakness. Ready for your mind to be blown? Every time we have an upper shadow, it shows us that we are going to be falling coming on up. You could see this is on a daily chart. Every time we had an upper shadow, we then fell shortly after. Upper shadow, we fell. 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 When we have upper shadows, it shows us that the stock spiked on up, it couldn't hold its gains, started giving a lot back, and now the momentum has shifted. Now, it's not only just out of this example. Let's just look at examples from today. Let's just look at examples on what we have at this moment. Right? We want to take a look over on LMFA. And you see on the daily chart, upper shadow, big time on dump. Here's an upper shadow, big time on dump. We could take a look at EFSH. Here's a big upper shadow, big time on dump. Big upper shadow, big time on dump. Here's WISA. I'm just going through the top gainers of the day. I'm not having anything like stored up. I'm going through today's charts. You could see very big spike, big dump on down. Here's a very big upper shadow, big dump on down. Let's go to HCDI. HCDI, big upper shadow, dump on down. Big upper shadow, dump on down. Big upper shadow, dump on down. Let's go to LMFA. Big upper shadow, dump on down. Here's a big upper shadow over here, big dump on down. Yes, guys, it is insane to think about. So you're telling me right now that whenever there's a big upper shadow, 9 out of 10 times it's going to come crashing on down within the next few days? Correct. So if I see a big upper shadow and I short it, which means I bet that it's going to fall, I'm going to win money? Correct. And now you are knowing how I've been able to make $550,000 a year. You can see how today I am currently up $1,777. You can see how I'm consistently making money in the stock market. We are basically playing stocks that are spiking on up, get an upper shadow, shows that momentum has turned, and they dumped on down. The strongest upper shadows are going to happen on the daily chart. They are going to happen on the daily chart. The weakest upper shadows are going to happen on the 1 minute chart because they're going to happen much more often. So some people may say, oh, Deck, is this an upper shadow, or is that an upper shadow, or this an upper shadow? The thing is, yes, you can still see upper shadows on 1 minute charts where you can see you got the upper shadow and you got to reverse back on down. Or if we go over towards like LMFA, we can see that we do have that big upper shadow right here and we dump on down, that big upper shadow right here and dump back on down. The 1 minute time frame will give you the most direct upper shadows, but they're also going to be false upper shadows at times. It kind of comes down to your risk and reward. If you wait for a daily chart upper shadow, you are going to have to wait for the stock to give a lot back for that upper shadow to form. On a 1 minute chart, we can see it happen at the very peak as you climb the mountain. But in a 1 minute chart, it doesn't always indicate the top. Sometimes you have an upper shadow and then it spikes later on in the day. Sometimes you have an upper shadow which does turn into the top and then it turns into a very nice sell-off. An upper shadow has to be clear. It's not just, sometimes I see, traders saying, oh, Deck, this is the upper shadow or that's the little upper shadow. You need a clear upper shadow. I mean, even if you think, hey, Deck, I think this is the upper shadow right here, guess what? You still made money. You could still see upper shadow and it reverses back on down. And yes, you could see upper shadow and reverses on down. You could still see upper shadow and reverses on down. All these still do work. Every single time they still do work. But you want to realize that the bigger the time frame, the better the chance of the upper shadow being successful. Upper shadow on a 5 minute time frame led to a nice drop. Upper shadow on a 5 minute time frame led to a nice drop. Larger the time frame, the better and more consistent that these upper shadows are most likely going to work. Let's take a look over on like OMH. Let's take a look at these upper shadows and let's see if every single time I had an upper shadow, if we traded it, would we been able to profit? So you could see the upper shadows already in the 5 minute time frame. Nice spike, dump on down, nice spike, dump on down. Here's a spike and a dump on down. Here's a spike and a dump on down. So we can see it's working here. But how long is it going to work for? Because you can see some people did a short here, and if you didn't take your profits, it ran on up. And if you have this upper shadow here, you could see it fell on down. But is it going to spike back on up? Well, that's the big question, and that's why a lot of times you got to look at the daily chart, but you got to wait until the day ends, and that means it probably gave back a lot of its gains already. So it comes down to risk and reward based off these upper shadows. Now, at the same time, yes, traders, you can go ahead and you can look for lower shadows as well. I will say lower shadows aren't going to be as consistent, but they will have the same idea. So if we want to, for instance, here's a lower shadow and you do have some green candles. Here's a lower shadow. You can see here's some green candles. So lower shadows will work, but I will say upper shadows are just going to work better. So some easy setups that you may want to learn as a trader always watching these patterns. Some of my favorite setups here: hammer patterns, bullish engulfing patterns, the morning star, shorting star, abandoned baby, dark cloud cover, doji star. There's a lot of candlestick patterns out there. I just want to teach you some of my go-to favorites. So we do have the bullish engulfing pattern. This is a very consistent pattern. It works a lot. That's why I like it. What we have here is the bullish engulfing pattern is a 2-candle reversal pattern. The second candle completely engulfs the real body of the first one without regard to the length of the tails and shadows. The bullish engulfing pattern appears in a downtrend and is a combination of one dark candle followed by a larger hollow candle. On the second day of the pattern, price opens lower than the previous low, yet buying pressure pushes the prices up higher level to the previous high, culminating in an obvious win for the buyers. It is advisable to enter a long position when the price moves higher than the high of the second engulfing candle. So you guys got that? Good. Let's move on towards our next one. Deck, I don't understand anything. Don't worry, guys. The thing is, this is why I don't like stock trading textbooks. How confusing did that sound? How many people actually who are brand new understand what the heck that I just said? It really is much more simple than what it means. Engulfing. We are engulfing the entire previous day. So that's what's happening at this moment. When you go over to www.google.com and just type in bullish engulfing pattern, it will happen the best on the daily chart. But what this is this is going to be a very consistent pattern where we will have dropping, 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 and the green candle. There will be a green candle that gaps down and finishes the day above the red candle. It engulfs. Like if we slid the entire green candle over the red candle, that whole entire red candle would disappear. That's how we know that we are going to reverse. So you could see we have falling, 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 falling. You could see we have a red candle. We have a gap down, which we open up underneath the candle. Then we finish above that candle. We engulf the entirety of that previous day. That's a sign that a reversal is going to be coming. We are engulfing and reversing. That's how we know a bullish engulfing candle is formed, and that's how we know a reversal is now going to come on up that we can buy and hold on the long side. So same exact thing with bullish engulfing. You can imagine that we also have bearish engulfing. Bearish engulfing would be if we're spiking, and we have a big red candle that engulfs the green candle. So just like we have with bullish engulfing, we can also switch on over to bearish engulfing, where it would be the same exact thing, where we have a red candle eating up the previous green candle, and that's where we would reverse all the way back on down. It basically just shows that buyers have left or shorters are now in control, and that's where we're going to start turning back on down at this point. That's one of my favorite candles to know that a reverse is going to be happening. Another great candle that I want you guys to realize is going to be a doji star. Doji stars are also going to indicate that a trend is about to end. All of these candles are just showing us where reversals are at. Remember, I don't teach, oh, this is the best stock, everyone go buy it for the next 10 years. How do we make money in the stock market? We make money in the stock market by knowing where reversals are going to happen. When reversals happen, traders, that's where we make the most money. That's where we make the most cash, because if I can short a stock at a high, I know that I'm going to be able to make the most money as it falls all the way back on down. So a doji star is going to be a candle that looks like an addition sign. Okay, it is going to be where there's virtually no movement within that time period, and this will always work best on the daily time frame. When we have a doji star, it shows us that we have hit our high, we have no more buying left, and now we're coming back on down. If we come on down and we have a doji star, it means that there's no more sellers, and now buyers are going to come on in. So dojis would look like this, where we have the addition sign, it's time to reverse. An addition sign, it's time to reverse. You will see dojis a lot, and dojis are just great ways to know that a stock is going to be turning or going to be reversing, but they're going to happen a lot of times, not only on daily charts, but also like 5-minute time frames. If we ever have a consistent trades, consistent uptrends, I bet you we can probably find a nice, GSIT. You can see a couple different patterns or a couple different charts that are already happening at this time that I brought on up. Number one, over on GSIT, we can see a little bit of upper shadows right here, right? We can see a little bit of upper shadows. And then can you guys realize right before this upper shadow, do you guys see this addition sign? You guys see this addition sign right here? Can you also flip to the other side and you guys can see that addition sign right here? Those are doji stars. So how crazy is this? We have spike, doji star, indicating that we're coming up near its top. Upper shadow, indicating that we are hitting our top. Doji star, heading back on down. So this is just an example from today. Remember, I'm so confident in the things that I teach. I don't want to just have tons of textbook patterns from years ago. I like to show you that I can find these patterns literally today, which is how we're able to make our money, and this is how we're able to make our profits. So that's how good it is. That's how relevant these patterns are and how often they work. They happen every single day. Now, let's keep on going and learning more. Well, we have our hammer patterns. The hammer pattern, and you can see it looks like a hammer. It's basically a long handle with, almost like a handle type at the end, or like a big rock, a big stone at the end. It would be the same exact thing as a lower shadow. Hammer pattern, I just call it a lower shadow. You see a lower shadow? It means sellers try to push it on down and buyers pushed it on up. Sellers had a chance and then buyers came on in. At the time that it looked like it was going to dump, buyers came in and pushed it all the way back on up. So a hammer pattern would be the same exact thing as just having a lower shadow, which shows that there's going to be a reversal in the market. And there's going to be a lot of patterns that happen. The morning star pattern, the shooting star pattern. Shooting star pattern is the same exact thing as an upper shadow for me. People say, oh, hammer patterns is when we have lower shadows. Shooting stars is when we have upper shadows. To me, an upper shadow shows a reversal going on down. A hammer pattern is a lower shadow, shows us that we have a reversal going on up. Just keep it simple. I don't need to be looking at shooting stars or lower patterns, but so many people love candlesticks so much. They have all these different patterns. They have all their bullish candlestick patterns, their neutral basic patterns, their bearish candlestick patterns, where you can go ahead and you can learn all these different patterns. Our candlestick basics right in the middle there. And we have all of these patterns as well. So we can see that bullish engulfing, bullish harami, bearish harami, evening star, bullish tweezers. We have dragonfly, gravestone, bearish marbuzu. We got tweezer, we have all this stuff. All right, team. And, it's kind of just crazy to think about that there's all these candlestick patterns. But at the end of the day, let's make it as simple as possible. Any doji star, which basically looks like an addition sign, is going to lead to a reversal. Long lower shadows leads towards a bullish reversal. Long upper shadows leads to a bearish reversal. And that's all stock trading comes on down to when it comes down to candles. Doji star, you found your bottom. Get ready for a bounce on up. Doji star at the very top, you know you're coming back on down. Long lower shadows, you know you're at your bottom. Get ready for this thing to spike back on up. Long upper shadows, watch this thing to spike on up. You know it's coming right back on down. So one of the best things that I realize about these plays is that these stocks almost have like a DNA. And this is something I talk about a lot, that stocks do have DNA behind them. And what I mean by this is, let's just think about it as a human at first. If your parents both have red hair, you probably have red hair. If your parents are both 6'5", you're probably 6'5". If you guys are a certain skin color, white, black, somewhere in the middle, mocha, I don't know, you probably have that skin color because it's within your genetics. It's within your DNA. Same exact thing with stocks. Stock trades, I like to look at the past chart history pattern because it looks at your DNA. If I see that WHLM, hey guys, every single time WHLM goes on a spike, it crashes on down, and it goes on a spike and crashes on down, and it goes on a spike and crashes on down, and it goes on a spike and crashes on down, it goes on a spike and crashes on down, you better believe that I am getting ready to short this play right here. Because every time it goes on a spike, it comes crashing on down. Same exact thing with APDN. Hey, Deck, every time APDN spikes, it crashes. Big upper shadows. It means it spikes and gives all of its gains back. You better believe I'm going to be looking for a short because we can see that in the previous DNA. If we can see that a stock has never spiked before, let's not expect a spike. Let's say to ourselves, hey, a stock usually spikes and holds its gains for 5-6 days. Let's not short that play. If it's a stock that spikes and always gives its gains on back, well, let's understand that it probably is going to give its gains on back. So these are all extremely important things for us. Here are some more candles: Abandoned Baby, Dark Cloud Cover, Doji Star. You guys can pause this right here if you guys need to. Other than that, I think we just gave a lot of information right here. That's going to be wrapping up right here.